What is behind gold and silver's massive runs? Is it counterinflationary? Is it a fear trade? What is it?
We've seen tremendous safe haven buying supporting gold and silver prices, but really we're seeing negative reals turning yield. It's been boosted by the fact that we've continued to have a weaker dollar, inflation expectations are rising, stimulus packages at unprecedented amounts have all created almost a perfect storm for both gold and silver prices, and that investment demand has more than offset the physical weak market.
Yeah, I mean, does gold technically or in other metrics, Suki, look like to you it's going to break out? I've been reading a lot of research, looking at charts because there's nothing else to do. And I got smart people saying gold is going to 25 or 2,800. What do you think?
Most of the risk looks like it's still skewed to the upside. Yes, we may see some short-term corrections. There may be some temporary profit taking. But if we look at that macro environment, it still points to more upside risk. We can see gold prices certainly testing the all-time highs that was set after the global financial crisis. But given the unprecedented monetary stimulus and the fact that we still expect interest rates to remain low or negative on a global basis, it creates an environment where we could see prices remaining at elevated levels for a prolonged period of time.
On this show, we've talked a lot about how exchange-traded products, we just did an ETF guest, how they have maybe altered the market, not for good or bad, but they certainly impact the way stocks trade. We buy these passive investments. You have the same thing in precious metals. They're ETPs, exchange-traded products. How has the demand for those been? And do you think that outside of, backing up a Brinks truck and buying bars of gold, how the ease of buying and selling these paper products, if you will, online, exchange-traded products, how that has impacted or skewed the physical precious metals market?
The growth in the physically backed ETFs has been tremendous. If we look at the inflows for the year to date, we've already surpassed 850 tons. To put that into context, the previous record year was 2009, where we had inflows for the full year at 646 tons. So we were up from previous full-year highs by over a third. So the growth is really strong, and it's interesting that investors prefer to hold physical gold in the current environment rather than the initial exposure which we saw after the global financial crisis, which was a preference to holding paper positioning, holding tactical positioning. Investors this time are looking to hold physical metal, and that growth in the investment demand has more than offset the weakness that we saw in the physical market. And so both India and China have been incredibly weak in the past quarter.
Yeah.
And if we compare this to last year, demand from India and China was around about 400 tons. In Q2 alone, the demand in ETFs was 434 tons. So it's more than offset that weak physical market.
Bottom line is, are you still advising your clients there at Standard Chartered, Suki, to keep buying silver and gold?
There's also downside risks, of course, around vaccine optimism. If the physical market is so weak and investment flows slow down, or if we see a bounce back in real yields, that could see gold prices correcting. But we would really see these dips as buying opportunities. We still think that there's more upside risk for both gold and silver, and we expect prices to surpass those all-time highs and continue to trade and test new highs.